the 16th of March, and it's Steve O'Hare from Signal Centre. Welcome to Talking Bull. We're going to go through the news headlines and then dive into some technical analysis, have a look at what's going on in the markets, and see if we can give you some information on what to expect today. Fed rate looks like it's locked in. There are very strong expectations that the Fed will sanction a 0.25% rate increase at today's meeting. Statement will be important with a particular focus on inflation, and markets will take strong notice of the latest interest rate forecast from individual committee members. Ukraine peace hopes sustained. There has been no major military developments in Ukraine over the past 24 hours, with Russian forces edging closer to Kiev, but not launching an all-out attack. Humanitarian conditions remain desperate in Mariupol, with the siege continuing. The US and Europe have imposed additional sanctions on Ukraine. Risk appetite is recovering. Volatility in equity markets has remained very high, but a strong rebound on Wall Street has improved the global tone, with markets also rallying strongly in Asia. Immediate concerns over the China coronavirus situation have eased slightly, which helped trigger a strong recovery in regional equity markets. Gold continues to sharply decline. We saw another decline on Tuesday. There's been an element of optimism over peace talks in Ukraine, which has curbed potential demand for defensive assets, with the gold the main casualty, obviously the real safe haven asset. Yen and Swiss franc have also remained on the defensive in global markets. New York Business Survey slides. The US New York Empire Manufacturing Index maintained recent volatility with a sharp decline to a 22-month low of negative 11.8 from a March from 3.1 previously, and well below consensus of 7. Companies, however, were more optimistic over the outlook. ECB's Lagarde expects inflation to decline. Stated that inflation is still expected to decline progressively in all scenarios and settle around 2% target in 2024. I have got my doubts about that. Anyway, let's dive into the markets. Just get rid of this dog. Let's dive into the markets. We'll take a look at Euro Swiss. We can see on the sort of bounce back we've had in the euro and the sort of sell-off in Swiss. We can see markets have moved higher. We're testing resistance levels around this 103.30, 103.50 level. Further upside potential there. Looking at euro dollar, obviously we've stalled here as well. 108.07. The rally from there has been pretty significant. So this impulsive move lower, we're now looking at maybe an ABC correction, like a 3-wave correction. Inverted hammer here, so that's signs of bottoming also. So 109, the level really to look for from a support perspective. Really need to push above 110.20 before the potential move up to 111.20 to finish off the correction. On cable side of things, again, inverted hammers here, so that shows signs of a potential bottom. That's around the 130 level, quite a psychological level in terms of sterling dollar. Resistance coming in now at 130.90 and higher between probably a range really between 130, 160 and 132, the figure on cable. Dollar yen has continued to higher, although we have posted a hanging man-like candle. Support really, we should see support around the lows today, 118.17, and also looking to buy dips around about the 117.70 level for this market, this move to continue. We've now had 7 positive days in dollar yen, and although it looks like it's stalling ever so slightly, hasn't really turned yet. And finally, Aussie dollar, bit of a morning doji star formation forming on this, so potential for more upside here. We're trading around 72.35 at the moment. Plenty of room for recovery, and targeting really to negate the gains that we saw on Monday's sell-off session, where we opened around about 72.87, so targeting a move up there. Break back down below the lows of 71.65 would be significantly bearish. Moving on to commodities, let's take a look at the oil to start with. Oil has stalled in the sell-off. We got down to 92.30. This was my gun to head challenge, I think, yesterday. Yes, managed a 1.14 winner in oil before the market has rallied overnight, looking a bit positive. You can see my trade idea yesterday, which closed at 9 o'clock. We were trading around about here, and it spiked higher. Hasn't quite taken out the stop that I had in place. Really looking at 98 level, $98 level of resistance. So maybe an opportunity again there to sort of fade this resistant area around here. A break above here should be pretty significant. But obviously, Ukraine-Russia situation has calmed down. It's not over, obviously, so there's still potential for some volatility there. We got oil inventories out later as well. That should be significantly volatile. On the gold side of things, the gold move has pushed lower. We've got this lovely head and shoulders formation, which has really played out nicely. Show it on the 4-hour chart, which we highlighted to you a little while ago now, few days ago, and that has played out really nicely. Hasn't quite achieved the measured move target, which was down at 1870 to 75, but he got down to 1907 yesterday, and is trading just above there, 1920 trading. We should see some resistance back up on the 1932 level, but I think gold remains under pressure for the near term, obviously volatility dependent. Take a look at Bitcoin. How is Bitcoin faring? It had a bit of a spike higher. We can see this move up to 41,633 overnight. Nice little volatility move on the hourly chart. This saw the spike happen between 2 and 3 o'clock. Really nice spike higher, and gave up the gains straight away. So a bit of a rejection of them gains. Haven't got any news on to hand as to what caused that, but yeah, at the moment, price action has stalled around about the 37,000 level, just in front of there more recently on Monday, and has maintained a slight positive bias on the short-term time frame. But obviously, overall, still in a real sort of like range trading scenario with cryptocurrency, around about 46,000 being the top, all the way down to 33,000 being the sort of like supportive area at the moment. 28,800 is the long-term support level, with obviously the all-time highs sitting close to $70,000. Take a look at indices now. A bit of a bounce back. We saw let's move down to a shorter term time frame. Move down to the 4-hour chart for these indices, and we can see what price action has taken place. FTSE has recovered from last week's spike lower, moved higher, and found support this week at 7,080, and projected higher this morning. So looking very positive this morning. It's broken above Friday's high, so that positive on the weekly chart as well. Sorry, that's showing a monthly chart. Let me just get a weekly chart up. As we can see, we've taken out last week's low. This we can redraw this trend line. There's not really, I mean, the main trend line that we saw, we've broken down below, so we are still below this long-term trend line, which goes back all the way to the pandemic, the start of the pandemic, with this November lows, and that was November 2020 and November 21 lows, and we have broken below that. So we still remain slightly bearish overall, potential for a top here, but we are getting some decent moves over the last couple of weeks in terms of a recovery. On the DAX side of things, we saw a positive week last week. This has followed through into this week. The 4-hour chart is drilled down. There's a lot of lines on here, making it very confusing. But we're seeing a nice little turnaround, inverse head and shoulders, after this double bottom has played out. Looks pretty good. This is the looking at this as a neckline, staying above the 14,080 level is positive. I'll show you the head and shoulders formation. Head and shoulders formation looking a little bit like that. So good potential for an upside move. Measured move target in here would be we'll take the head to the neckline and then project it higher from here. So that looks like it's targeting recovery towards these previous highs. Extend this lower. We should find some resistance along this trend line, the downward trending resistance line, but also that's where the target is 15,500, quite a way off, and it will take quite a while to get there, I would expect. But a nice strong push higher today, and we're trading at levels we haven't seen since the start of March. So looking at the Dow, similar sort of formation. We've seen this sort of like bottom. We've got the potential for a double bottom formation. That would require a break of this neckline here at 34,185, only 300 points away. Not really. It's only a short hop in terms of Dow price action, which trades, well, currently we're seeing sort of like ranges of around about 700 points per day in Dow. So quite a volatile market. NASDAQ was under pressure at the start of the week. It's recovered quite nicely from in front of support, which we can take back from the May 2021, stalled there, and it's reacted really nicely. Looking to sort of engulf yet last week's price action. We'd need to get a close above 13,800 for that to happen. So looking out for that. Shorter term chart seeing a nice projection higher in the last 4 hours, support coming in at 13,422, targeting resistance at 13,865, currently trading in the middle of that. And S&Ps, again, similar type of formation, seeing this nice bounce back in equities, maybe looking forward to the Fed meeting later. So that's pretty much it. We're seeing quite a positive outlook really on the indices side of things. Gold remains under pressure. Oil could be a nice one to fade. I did it yesterday and it worked out pretty well. And so as a gun to head challenge, which is a little bit of fun we have, Joe's obviously not here, but I'll take over the mantle and see if I can get another winning trade idea from this gun to head challenge. I'm going to leave the stop at the same level. 90. It was 97.98. I think the stop was at yesterday. What does that tell me? 125. So let's go for a nice 3-to-1 risk reward. Would be looking to target a move down towards 92.98, getting short here at 96.73. So that's my gun to head trade idea. Selling WTI crude oil. Obviously, remember there will be a bit of volatility in there today, waiting on the oil inventories, which is due out at around about 3:30 UK time. Unless actually could be a bit earlier, so we have to check on that. Let me see on the calendar today. It hasn't actually brought it up. Let's take a look at if we can grab that news from our news sentiment parent company Acuity. Let's take a look at oil, see what the news sentiment is also saying. WTI crude oil has turned positive in the last 24 hours. However, we can see from this is the 7-day moving average on news sentiment is still lower. And yesterday, actually, we did get a nice little, it's only a 40% confidence in the market falling within the next 5 days. Overall, the main takeaways we've got from this, there's more confidence in the buy trade ideas at the moment on the news sentiment side of things. But looking at this, currently we can see price has moved lower, new sentiment has moved lower on a 7-day moving average, and we're expecting further downside there. So that sort of ties up nicely with the short-term turnaround in the technical chart, which I'm looking at. So I'm happy with that one overall. We were looking for that's what I was looking for. See if we can get something on the news. See if we can get the oil inventories on here. 3:30, we're expecting that the oil inventory is out. That's the EIA crude oil stockpile report. It's a weekly measure of change in the number of barrels in stock of crude oil and its derivatives. That's released by the Energy Information Administration. So that took forward to expected to be volatile. The consensus is for a fall of 1.375 million, the previous negative 1.863 million. So yeah, let's see what that brings later on. So yeah, thanks for joining me today. It's been a pleasure to take the show on my own, and we'll see what Joe makes of how I've handled it tomorrow. I'm sure he won't have much to complain about. Who knows? Thanks, everyone. Cheers. Take care.